Hello everyone, it's another great week. I'm pretty sure last week a lot of investors not very happy, but kind of anticipated with the Fed, giving the thought about what's going to happen with tapering. I just wanted to show you very quickly about illustrated graph that telling you Dow Jones Industrial Average, which for the week, it ended Friday or 33,072. 30,800, actually 800, that's not the right number. And it is relatively compared to, if you look at the level, which is around, this point, and also the April, because this is a 3 month snapshot. So you have here one point around May and the April timeline, where you way back to where it was. Um, so the recap, I'm going to give you some quickly recap on what I'm thinking about insights going forward. The S&P 500 slipped from near all-time highs Monday, worried that the Fed Reserve two-day meeting could usher in the top of bond tapering in the wake of a sharp upturn in inflation. On the other hand, Google and Microsoft, while Apple, Amazon, and Facebook trade higher. Cynicals, including industrial, energy, and financial, were not having a good day. Long-term Motor, symbol RIDE, fell 17% after Steve Byrne and Julio Rodriguez resigned as the company's CEO and CFO. That's why it is important to pick the right electric vehicle company or company that you think will be profiting with enough cash. The yardstick divides the combined market capitalization of world publicly traded stock by global GDP. A reading of more than 100% suggests the global stock market is overvalued relative to the world economy. Bitcoin had about 40,000 Monday as the most field rally was held by the backing from some investors who continue to favor Bitcoin as a hedge against rapid inflation, worry that Federal Reserve could be too slow to act. Well, right now it is Saturday and you're already back down to 36,000 again. U.S. retail sales fell 1.3% in May. The consensus Bureau said Tuesday. Economic surveyed by Bloomberg held a median estimate for a 0.7% decline. The day of web for tech proved positive for value stock on the ongoing rotation from value to growth and vice versa resumed. Energy led the move high in Silico as oil price continued to trend near multiple-year high on expectation of strong energy demand. EV stocks such as XPEV dropped a little with HYLN also slipped on Tuesday. A VC shared the corporate investment strategy that increased his fund size sixfold in 4 years. He also laid out his unique use case for betting on a token that surged 200% this year. The Federal Reserve kept interest rate and month bond buying steady, though signaled the two rate hikes could be on the card by the end of 2023 amid forecasts for faster economic growth in inflation. The Fed hiked its interest rate outlook in 2023 to 0.6% from previous projection 0.1% in March, signaling 2.5% rate hikes in 2023. The Fed says the unemployment rate for the 2021 at 4.5%, unchanged from 4.5% previously, further to 3.8% next year. I'm not sure, to be honest, I'm not sure this 4.5% is true and realistic. So I'll see how things go because, again, this unemployment is very interested that very difficult to measure. Some people I talked to, they were arguing that the reason why the rate was dropping, obviously this Thursday was have a higher 415,000 versus the estimate 380,000, which suggesting the market had yet to recover. It's not as strong as it suggested, but regardless, you got to remember that, some people, they were laid off, maybe, I don't know, at the age of 60 who worked for a large corporation for 20 plus years. They had enough money in savings, so they decided to retire. Well, there are still a lot of women, if you remember the pandemic, that they have ability to look for jobs, but then because they're taking up child care problem, that they're taking care of 2 children, 3 children, so they were not unable to work. These people not kind of unemployment, and because they're voluntarily leaving, well, again, the definition of voluntarily leaving the workforce, and then, you also got people that because the state benefit is dropping off, so these people were not also counted in number. So again, I just want you to think about this 4.5% and even 3.8% next year, which is too optimistic in my opinion. The market that was about 3.8% unemployment rate suggested a very bullish economy in U.S. and I really challenging, and I don't think that's really the case. And also this percentage is also the alignment which I would like to compare with salary and inflation, because well, assuming everything constant, you still make the same pay, you didn't get pay cut, you find a new job, but then inflation's, which is you buying something more expensive, 20% more, US dollars devaluation, well, are you really better off, right? So something to bear that in mind with these numbers that Wall Street or US government want you to believe in. And then the other thing too is people know about inflation, especially the money coming. But the good news is, after this thing was announced that the U.S. dollar seems to be kind of going back up, yet the yield curve still remained. We went a little higher that day, but then it dropped a bit. It's around 1.5% level. So that actually good news for Nasdaq in many cases, because the growth start to continue burning cash, will be still easily accessing this extra money. You're buying a particular $6 trillion that go into the play. Even if you get 1/3 of that, that's a lot of money going to be in the market to drive employment, hopefully, with a reasonable pay. And also the $15 minimum wages. I mean, that is going to push through, and, somehow, again, you have to have a very good balancing act to make sure that things were not going to be only favoring, certain type of people, hopefully. The Federal Reserve kept interest rate and monthly bond buying steady. We covered that. So Treasury bill actually jumped sharply, and then it fell again on Friday. Silico, which tend to move in tandem with improving economy. Silico, which is actually better. To conclude, the major driver of the U.S. 10-year on obviously Friday just also noted that the market actually did pretty well, and Dow pretty bad. The Dow actually had dropped 550 points. So you're just signaling that investor may start worrying and thinking, looking at some stock per house is overvalued, right? And the U.S. 10-year Treasury was up 6 basis points, 1.56 Wednesday, but it went back down again. U.S. trader mix on Thursday. Willis job came in 412,000, so we covered that. And on Friday, global share had of the steepest weekly drop. MSCI All World Index were down 0.4%, heading for 0.64% for the week. Largest percentage term in a month. Yields on the 5-year U.S. Treasury bond actually went down 2 basis points. Friday wasn't a good day. S&P 500 down 1.31%. And Nasdaq also down 0.92, which means all three indexes were down. Adobe led the Nasdaq up more than 3% after second quarter reporting strong earnings. CAI up 46%, announced capture by Mitsubishi Electric capital of $56 a share. Despite the steep drop, yields are up around 3% only for a week, on track to net a 4-week decline. JP Morgan, Citigroup, and Goldman Sachs and FANG also trade lower Friday. Overall, Dow Jones was down 1,189.52 points. I mean, because there were times you look at it, the market will crash in really a lot, like 1,000 points in a day. You've seen it before and went back up and down again. But this one seems to be a little more gradual, except for the day of Friday that dropped 550 points. So 3.4% down for Dow. Nasdaq was down a little bit, just 39 points, and S&P 500 down 1.9%, 4166.45. Dow Jones retreated to early May level again, and if you look at the graph that I showed earlier, just to give you some idea that you went back to the May and April timeline where really you stand. Of course, you can see that there's a V-shaped big spike here. So here, you could be like I said, if you hear my previous video, you will set up a stage for actual pretty good growth, for July. So I'm actually look forward to that. And the economist Aran, I can't even pronounce the name, is Dormancy Fund Manager Chair acknowledged that the central bank decision to remain ultra accommodative for the foreseeable future will pop up stock for the rest of the year, but that will continue to encourage financial experience in market. As communicated previously, market dip was an opportunity to buy, given that the expected Fed possible temporary uncertainty is clear now. US dollar have risen recently, and yield curve remains about 1.5% level, because at one point it would jump to 1.8%, driving the market keep pushing down the Nasdaq. But at the time, it's interesting that if you look back, the Nasdaq and Dow actually went, S&P and Dow actually went higher. This time, Nasdaq have been caught up this week. Of course, it was not a good day Friday, but the Dow have been keep going down for 1,000 points a week. So I am still thinking, this is a good stage of setup, and then you will drive the market with the earnings season coming up. I think, if you look at Dow Jones Industrial Average, only 30 stock is easy to go with. I still think Bowling, Disney, 3M, Chevron, which energy stock, if it did 5% in my previous video, it's good to buy, because from between now and August, you probably can take advantage of potentially oil price drop to $80 a barrel, which means oil stock popper typically will also follow that. And McDonald's also, I think, eating retail restaurant already back to where it should be, and McDonald's have a real estate business as well, supporting that with on the revenue side. So McDonald's is a good one. And actually, I did recommend McDonald's way back last year. If you can look at it, at that time it was about $200. So that McDonald's is a consistent stock, but not growing as great. If you think about it, 200 to 230, it's like 12% return, but still good. EV is a little bit high now, so we don't recommend to buy at the level, and unless there's some pullback like XP EV, if you push it, it's at $45 now. If you can push up further to 49, then you're very critical point about 50 if it can break through that, right? Then it's already very bullish in a sense. You look at technical perspective, that's already within 20 days bullishness. About 50-day line above that for sure on the average 50-day line. So, and then the volume was pretty consistent with the EV as well. You look at XP EV. And the NIO, news start to talk about, media start to talk about NIO again, so maybe that's could have a little push. And LI also dropped it from the bottom of $19, go all the way back to $29. So that's really a big gain there too. So, but then you have to be very careful which EV you pick. And for the long run, again, in 2023, 2024, your money go back up. If they actually turn from a loss to a profitability, I'm definitely knowing that things will be, very, very good for those EV stock. And then also BYDDF, I mentioned that, which Apple potentially negotiate to buy back driven. The stock actually have gone up from a $25.50 up to $29. So just give you the percentage of perspective how much it had changed, about 15% in a week. And the AI is still very good. This stock I still recommend it. They have a contract with Shell and whatever other stock that I've talked about in the past. BIGC is still waiting for a reversal, so it's around $60 a level. If you reverse, it will hit $70. I think it's good to take some profit there. And then FROG, F-R-O-G, I think if the momentum continue with NASDAQ, as long as the yield curve remains around that 1.5, it's not going to suddenly jump to 1.7, 1.75, and then 2%, which is crazy, then you should be, these NASDAQ stocks should be, and small tech stocks should be very well contained now. And then some people really think FANG is also a good place to be. Maybe if you have money, yes, because FANG is more expensive. To position yourself to buy some, to waiting for the earning announcement, they picked it up in July, August. I hope this is helpful to you. I gave you the tips, and I already told you prediction, and also just to give you couple of small penny stock, BRZL. Don't ask me why to recommend that one, but yeah, it is really cheap. And then somebody asked me about, if for those of you who bought the JUVAF, well, I think you really need to dilute it at 40 cents right now. So you may go back up to 60, 75 cents, then if you bought it 40 cents, what's the way of return? 75%, right? If you never buy that to dilute the one, I recommend around $1 that you bought at. well, then you go to 75 cents, you're still at a loss. And actually, indeed, it's still a big loss. So something to think about. And then I have a recommender. I will do a separate video perhaps to recommend a list of stock that I have seen that actually have driving pricing really low. It will be a good opportunity to buy. But again, I don't see the market crashing that bad. So 5% was the number. I didn't go down to 20% to put a position, but 5 to 10% per house. Then you can buy some in next week for the stage to set it up, to go up. So hopefully in a month, if my prediction of the big picture is correct, you will probably get another 15 or 20% depending on what you're buying. Hope you like my video. Please give me a thumbs up and email me with questions. Have a nice and wonderful weekend.